All right, cool. So the entry, continuation is very important because remember the strategy is indication, correction, right? Indication, correction, and then continuation, right? So if the market is gonna move like this, right? If it's gonna move like this, if you're looking at it, you're trying to enter in a place where you know that okay, if it gets to this level, we know that we can enter. Remember what we said from the beginning that there's always this level, at the level, at any level, right? At any level, there are buyers at the top and sellers at the bottom, right? And buyers and sellers are what makes up the market, right? So if you're going to if it's going up, down, up, I mean up, down, and then we know that that's a break, right? That swing high is being broken, right? Let's break it to this level. It tells us that everything above that is a buy, right? Buyers are strong at that level, and everything below it tells us that sellers are strong because remember it went all the way when it hit that level, sellers were strong, so they sold to this level, right? And then when it got to this level, buyers were strong at this level, right? That was the support here. Buyers were strong at this level, so they sold to that point. But when they get to this point, we know that anything above that point is a buy, right? So that's where you want to be able to enter because you know that anything above it is a buy. Do you understand? And then you put your stop loss right underneath that low because you know that anything above it is a buy because buyers are strong at that level. So that's how you need to understand it. So yeah, if you go back and watch that video a couple of times, you'll be able to understand it. So it's exactly the same thing here. The resistance level, the support level. Remember, the resistance support level they interchange, right? So they become the buyers and the sellers. So at this level, when buyers are strong, that is the support level, right? If the sellers are strong at this level, that's a resistance level. So if this is going up, if it gets to that point, that level that it broke, that high, that swing high that was broken to form a new higher high, right? When the market comes back to that level again, above that level, you know that buyers are strong. Why do you know that buyers are strong? Because it indicated to us at this level that I wanted to go up, right? So when you go to that level again, you're trying to look for buyers, right? There are confluences that come together. There are confluences that come together for the whole thing, to make sense. But you guys have got the basic structure. You understand understand what the trends are. You understand what the indication is. Indication is where swing highs and swing lows are being broken, and then you understand what the corrections are. What are corrections? If the market is bullish, right, and then the correction will be forming a bearish indication because it just needs to be a bearish trend because it's a bullish trend, right? But then the correction is always going to be bearish when it comes to an indication being bullish. And the continuation is, trying to continue the market until the next swing high is broken. And then obviously if it wants to move all the way up, then it moves up. Obviously similar to the bearish market. There's no difference. It's the same thing. If you flip it, that becomes the bearish continuations, right? So at this level, we had an indication that the market at this level, this was the lowest level here. And then when the market corrected itself, it broke that low, right? And it formed a new lower low. So that was an indication of what the market wants to do. And then it corrected itself. But then, when it came into that level, that zone that I was speaking about, when it came into that zone, it's not just a line, it's a whole zone, right? So when it comes to this zone, when it comes to that zone, you're looking for what? You know that it's likely that if it comes below that zone, then you'll be able to what? You'll be able to sell from there. So yeah, watch it a couple of times. And then let me know in the Discord if you guys have any question. Yeah, but today we're gonna go through our market structure again. Musa, do you understand as well? Yeah, is everything clear for you? Have you got any questions that you want to ask?
Yeah, I understand it.
Okay, yeah, that's
I
great.
just have one question.
Yeah, go on.
Previously you said, you know how you go into the market, you don't know whether you're going to buy or sell.
Yeah.
Is that the same with the trades that you take? Like you don't go into the market knowing that I'm going to trade today,
Yeah.
or is it like you have a certain amount of trades you take per week, or you don't set yourself an amount because you don't know when you're going to trade?
So I do. You have to set rules for yourself, right? When it comes to this thing, you have to set rules for yourself. So you can decide that, okay, in a week, I'm not going to take more than one or two trades. Some people take trades every single day, right? Because the market is always presenting opportunities. You just have to ensure that whatever it is that you're trading, it goes according to the confluences, and then the edge has to be on point as well. So when I say that, I don't come into the market trying to be like, okay, I'm going to buy or I'm going to sell. That's what I mean. I don't come assuming that, oh, today I'm just going to buy. I don't come in the market like that. I can decide that, okay, in a week I'm going to take maybe 3 trades or 4 trades or 5 trades or maybe just 1 trade. Remember, I'm a swing trader here, so I don't do scalping. I don't stay on the computer because I have other things that I need to pay attention to as well. So I'm not gonna sit in front of a trade for the whole day trying to scalp. So I look at the higher time frames. I look at positions that I want to take. I take that trade and I let it play out. It doesn't. With swing traders, it doesn't. Sometimes it takes a day. Sometimes it takes 2 days. There's a trade that let me show you. Let me show you this one. So this trade here, if you guys go back into the Discord chat, I posted this in the Discord. I think I've been waiting for this for like almost when is it? So this was sorry. This was 24th of June, right? 24th of June was when I put the buyers and sellers here. Right, it's 24th of June. Can you guys mute yourself? Because I'm hearing like feedback. Somebody muted or something. Yeah. Oh yeah, it's better now. Yeah. So 24th of June, right, is when I put this sellers. That's my swing high over there, and then my swing low here, right? And then it's been going like this for like almost how many weeks now? Almost 2 weeks now, right? I was waiting for either the indication to break that high or to break this low. It attempted to break this low a couple of times, but it wasn't successful because buyers were strong here. So anytime the market sold to this level, the buyers were able to buy all back to that level, and then they sold again, and then they bought, and then they sold again, and obviously now it's only just last week that this level was broken. So I took that trade. I'm waiting for that one to be broken as well. That line at the top. If it gets breaking, I could have held it, but I came out of it. But yeah, I'm waiting for that one to break as well. If it doesn't break, that will be obviously I'll try and see what the market is saying. If it's a sell, then I can do so. I got some trades in here, but that's how long I've been waiting for this to happen. So patience is what is the name of the game. You have to have patience. I don't always come to say that, oh, I'm gonna try and buy today, I'm gonna try and sell today. Sometimes I come into the market, I watch it and I don't see anything that I want to take, right? Sometimes there are things that I want to take, but it doesn't give me all the confluences that I need, so I don't trade it. But if you're starting, 9 times out of 10, you just want to jump into every trade, and that's some of the mistakes that I made in the beginning. I wanted to trade everything. I wanted to jump in everything, but I realized that I was losing a lot of money doing that, so I stopped doing that. I had to understand the patience, right? I had to understand that I have to sit. If I have to sit down for a week or two for this thing to play out, then I'm gonna have to do that. Remember, I trade from the higher time frame, so it took 2 weeks for this thing to play out. So the minute this high was broken over here, right? So I'll show you. I'll show you what my thinking in this particular setup, right? So when I saw that this higher lows were being made, and I realized that, okay, this consolidation has also been going on for some time now. But then once it broke, I knew that, okay, that was an opportunity for me to buy. So my target was, first of all, to go past this level. And then when it goes past that level, then the next target will be that level. And then the next target will be this level. And see what's happening here. So they've bought the market from that level all the way to that level, right? Now they've got to a place where there is a resistance, right? But we know what happened at this resistance level. When it got there, the market was sold. So I'm trying to see a reaction at this place next week to see, okay, is it going to just correct and continue, or is it going to, the sellers are going to be strong to sell the market all the way down? But we'll see what happens next week when the market opens. So when I say I don't go into the market with any expectations, I say I don't go there trying to say, okay, today I'm going to buy or today I'm going to sell. But then I decided, okay, maybe in a week I want to take 2 trades, or maybe just 3 trades, or in a week, if I'm taking a trade, I don't want to lose more than one. So it means that if I lose one, I'm not going to over trade. I'm going back to go and think of why I made the mistake, do my analysis, and then see the corrections that can be made. And then if I want to enter another market, then yeah, I do. But I don't come in saying that, okay, yesterday I sold gold, so today I'm going to buy gold. No, I don't do it like that. Because if that's the case, then I would have said, because I bought gold from this level all the way to that level, it's got to this level and I'm going to sell. But guess what? I don't know what I'm going to do here. Why do I know what I'm going to do here? It's giving me an indication that it wants to buy, right? Because what, this swing high here has been broken, right? It's giving me an indication. And I can see a correction is being made. Yeah, that black candle is a representation of a correction being made, right? So this high, this support level is being created over here, right? So it's likely it can break it or break that level. It's likely to break that that high level here, the high here, or break this low from forming that support level here on the 1 hour time frame. If I go to 15 minutes time frame, I'm gonna check here and see that, okay, this was the indication that we saw, right? And then the correction, remember, if it's bullish, the indication is going to be to the upside. The correction will be to the downside, right? So when you're correcting something, what's happening is that the lows are being broken, right? You're correcting on a bearish trend, the lows are being broken. So the minute the lows stop being broken, then you know that the continuation is going to happen. At this level, I can see that the lows have stopped being broken because this was a low. This was a low. This was a low, right? That was a low. That low was broken, creating that support here, that new low here, right? But this low has not been broken. What I'm seeing is that lower highs are being formed, right? So I don't until this high is broken, I'm not trying to buy. But then when this continuously come down, then I know that, okay, it's likely it's going to sell, but I'm not going to sell until I come under this level. Under this level is when I want to sell. So yeah, that's what I mean by I don't come into the market with what I want to do. I just see what the structure. Remember, if you go back to the video, the market structure video, I explained what the structure is all about. The framework of what the swing highs and swing lows of the price actions, what's happening in the market. That will help you to understand market structure. So today what we're going to do, I'm going to quickly go over market structure again, and then maybe we'll do a little bit of markups, and then that will be it today. What I'm going to do is maybe tomorrow, when I come back home tomorrow, maybe later in the night, around maybe 11 p.m, we may jump on a live we may jump on a live, and then we'll do some analysis for what the market is trying to look like for next week. So if anybody wants to jump on as well, all the guys can jump on, and then we can see what that will look like. So yeah, like I said to you, let's go back to market structure again. The frameworks of the time frames, right, of the movement of the price, the movement of the market, whether it's going up or down. If it's going up and down, you know that it's a bullish trend, right? If it's going down, you know that's a bearish trend. And then we already spoke about consolidation. You don't trade consolidation. That's a no trade zone, right? Because it doesn't tell you what you want to do. I want you guys to also pay attention to this, right? Anything between a high and a low, right? Anything between a high and a low is a no trade zone. Anything in between here is a no trade zone. Why? Because the high has not been broken. The low has not been broken. So we don't know exactly what's going to happen. But then if it breaks that high, then we know that, okay, it's an indication that it wants to go up. If it corrects itself without breaking this low, then we know that, okay, there's an opportunity for us to enter the market. It's safe to enter the market from this level because you know that at this level, buyers are always on top or in charge. So you can buy from this level. But then once you get to understand, go through the entry videos a couple of times, you'll be able to, get better. You'll be able to get like better entries. You'll probably be able to enter. For me, I'll probably enter the market from this level. Once the high is being broken on that level, there I know that there's a change of character. So I'll be able to, enter the market from there. But obviously, because you guys are new traders, the safe way to do it is to get to that level to know that, okay, buyers are on top of it. And then obviously similar thing for sales as well. Similar thing for sales as well. you know that in between the highs and lows, you're not trying. Is a no trade zone in between the highs and lows. Is a no trade zone. You're not trying to trade in between these zones, right? There's a high, that's the low. In between this, you're not trading anything. I mean, if you as you grow, you'll be able to find trades in there, but I won't. That's a no trade zone. Anything outside of it, if it's up here, you're looking to get into the market. If it's below here, you're looking to get into the market. But anything in between these two things, you're not trading anything. So let's try market structure, right? Highs being broken. So if it's a bullish trend, let's make this way. So okay. So let's take our trend line and let's draw the highs and our lows. So this our at this level, this is our low. At this level, this is our high. Right? So the way that the market structure moves is that you have to trace it, right? So the market moved from this place to this place, and then it came all the way down here, then it went all the way up here, right? So it means that that high was broken, right? So if the high is broken, if this high is broken, it means that a new high has been formed. So we move our trend line to that level. That's the new high. Where did this high come from? What formed this high? You trace it backwards to find the low that formed that high. This low is the low that formed that high. So we have a new low then. So this becomes our new low. And then the market came to this level, and then it began to go up, and then it broke that high, right? So the minute that high is broken, you have to know that a new high has been formed. A new higher high has been formed, right? You put your high over there. Where did that high come from? That high came from this low, right? You have to trace it backwards. It's like a snake moving, right? It moves this way, right? But it moves backwards to find the highs and the lows. If a new high is created, it moves backwards. You trace your way backwards to find, okay, this is the low that created that high. So this becomes our new low. And then the market came down here, and then it came all the way up here. It broke that high. So it means that what? It broke that high, right? That high was broken. It broke that high. The market broke that high. So what happens? A new high has been formed. So you move your trend line to that level. That's the new high. Where did this high come from? What formed this high? You trace it backwards. This low formed that high. So we have a new low with it. So it means that anything in between this and that is bullish, right? It doesn't matter, right? Let's assume this is the higher time frame, right? It doesn't matter if the market looks like this here. It doesn't matter if it looks like it's going down. It's still bullish because it's in between this high and this low on a bullish trend. So it doesn't matter if you come into the market and see that, oh, it's coming down. Look where it is. It's coming down. Don't be deceived. Until that low is broken, it's still in a bullish trend. Because this high was formed and this high came from this low. And because it's a bullish trend, anything in between them is still, even though it's coming down, somebody will look at this and say, oh, the market is coming down. But no, it's not coming down. What is the bigger picture? The bigger picture is that a new high was formed, and in between the high and the low, anything in between the high and the low is still, it doesn't matter what's happening in there, it's still a bullish trend, right? Cool. What happened here? A new high was formed. This high was broken, right? Creating that high. And then where did that high come from? If you trace it backwards, it came from this low. So what we're gonna do, we're gonna make this our new low. So it means that anything in between here is a what? Is bullish. So it doesn't matter if the market looks like this here, because people are gonna see this and say, oh, the market is going down. But why is the market going down here? Because you saw this? No. That's what market structure is important. Because somebody's gonna come into the market and see this and say, okay, the market was going up, and then when it got to this level, it started coming down. So because they see this, they want to try and short the market. Say, oh yeah, we're gonna sell here. We're gonna put we're gonna enter the market here, and then we're gonna put our stop loss here. And then you're gonna see that what's gonna happen is that because it's still bullish, the market is gonna come all the way here, and then boom, your stop loss is hit, and then you lose money. You have to see the bigger picture. This was the high. That high was broken, creating a new high. That new high came from here. So in between this and this, until this low is broken, we're still in a bullish market, because we are having higher highs and higher lows. So whatever is happening here, it doesn't mean nothing. These are all things that are happening in between the high and low of a bullish trend. So until this particular low is broken, remember the indication that indicates to us what it wants to do, then we'll know that, okay, there's a change of character now. The market wants to sell, and then we'll try and look for what entries from there. But then that is so important. Let's go to an actual trade market, and then let's see if we'll be able to find some examples to explain this even better. And usually you find it's got nothing to do with the time frame, right? It's got nothing to do with time frame. It's got everything to do with what the market is doing, the market structure. So for example, if you look at this right now, what would you say is happening? Is this a bullish trend or is this a bearish trend? What would you say this is happening? I'm giving you just 30 seconds to let me know. Do you think this is a bullish trend or a bearish trend? I'll give you just 30 minutes for you to think about it, and then let me know.
Wait, starting from where? Is it starting from that low there in the middle?
So okay, let's do it from here. So from here, for this area, yeah.
All right.
Is this a bullish trend or a bearish trend? What's happening here? I'll give you 30 seconds to think about it, and then we will draw our lines to see.
I'd say bullish.
Okay. All right. Cool. Now that you guys have thought about it, let's see. Let's get our trend line. We're gonna start from here, right? So came here and it went there, and it came here, and then it went there, and it came here, and then it went there, and then came all the way here, then it went there, and it came here, then it went there, it came here, then it went there, came here, went there. They consolidated a little bit here, so it's just consolidation. Came here, went there, came here, went all the way up there, came here, went there, came here, went there, and then here, then here, and here, then here, then here, then here, then here, and there, and now. Okay, so this is what this particular market, this is what this thing that you're seeing up here is what we've drawn right now, right? So based off the examples that we just did, let's get our trend line and see what this market is saying. So there was a high here and there was a low here. All right, that was a high, that was a low. What happened was the low was broken, right? Okay, so it means the new lower low was formed. And then where did this low come from? This low came from this up. So it means that we have a new high and a new low. And then what happened? This low, between this low and this high, is still bearish, right? But then what happened?
Yeah.
That low was broken as well. So it means that we have a new low. So this low was broken, right? It indicated to us, so this is a new low that we have here. Where did this low come from? This low came from this high. So we have a new low and a new high. And then what happened? This low got broken again, right? This low got broken, indicated downwards. So this is a new low. Where did this low come from? This low came from this high. So that's our high as well. And then what happened? What we can see that this low, there was no highs are being broken. But guess what we did? Guess what happened? This low was broken, right? Indication. So we have a new low then, new low here. Where did this low come from? This low came from that high. So we have a new high here, right? But guess what happened? That high was broken. It doesn't matter how small it was, it's numbers. So it doesn't matter if you got broken by just one. That is an indication of the market wanting to go up, right? So it broke it. So we have a new high. So a new high was formed. Where did this high come from? It came from that low, right? So it means that anything in between this and this is bullish, right? But what happened? The high were not broken, no low was broken here. But then when it got to this level, that high was broken, giving us a new high, right? So this high was stable onto this point, and then that high was broken, creating a new high over here. Where did this high come from? If you trace it downwards like the snake I said, This is the low that formed that high. So we have a new low there. We have a new low. So this becomes our new low. Okay, now what happened now? This high is here. This low has not been broken because this is the lower low that was formed. But then the high here was broken, right? Forming a new higher high, an indication. A new higher high was formed here. It indicated to us the market wants to go up. Where did this high come from? It came from this low. So we have a new high and a new low, right? Then what happened? Remember what I said. So right now, because it's bullish, right? Because a new high and a new low has been formed, a new higher high and a new higher low has been formed. So anything in between the two, doesn't matter if it's coming down, it's still what? It's still bullish trend. That's what we know with this whole structure. But then guess what? At this level, that there was an equal low that was formed here, so it still didn't mean anything. It still was bullish until that low was broken. When the low was broken, it indicated to us it wants to go down, right? So a new low was formed. Where did this low come from? This low came from this high, so we have a new high, right? So I know that you said that it was bullish, right? But then this market is actually bearish. Why is it bearish? Because this low was broken, right? Formed a new low here, and then that low came from this high. But guess what? Now anything in between the two is bearish. Does that make sense? If you have questions, let me
I
know.
thought it was bullish because you see the lowest low.
Yeah,
If you look to the left, the low there, aren't they on the same line?
Yeah.
Right there. That
Yeah.
one, no, the one below.
this one.
Go down. Yeah, this one. Isn't it on the same line as that low you marked?
Yeah,
So wouldn't that be equal lows?
yeah, it is equal lows, but remember that we're looking for the structure, right? So
Oh,
think about it. This is the low that was formed at this level. That was the low that was formed, right? But then that low, this low came from this high, right? But then this low created this high. So that's a new high being formed here, right? That's a new high being formed here. And this high came from this low. And then at this level, this high was broken, right? So that's an indication, right? The market wants to go up. It formed this high, right? But this high that was made here came from this lower low. So this is a higher low, this is a higher high. So this becomes our new low. Because
Oh.
do you understand? So
yeah.
so this becomes our new low. So this becomes our new low, and that becomes our new high. So anything in between these two is bullish because this high was broken. Do you get it?
Yeah.
This high was broken. So that's an indication that the market wants to go up, forming a bullish higher high, new higher high. But then what happened? The market was corrected itself. The aim was, because it's bullish, the aim was that if it corrects itself, then you want it to continue going up, right? But what happened was that it created a lower. This is a new higher high was formed. It created a lower low. So it created a lower high. Yeah, no, it created a new lower high and created a new lower low and a new lower high, right? But then this low was created, right? But that low that was created didn't actually break any structure. So up until this point, it was still bullish until that low here was broken, right? So that low was broken. So when that low was broken, it formed a new low here, right? So this is the new low that was formed because this low has been broken. And where did that low come from? That low came from this point. Do you understand? Because now a new lower low has been formed because this low has been broken. And anytime you're seeing lower lows and lower highs, you know that it's bearish, right? Because now this is a lower low, this is a lower high, and now this is a lower low. So it cannot be bullish. So anything in between here is bearish until either this gets broken to indicate that it wants to go up, or it continues to go down because that low has been broken. So until this low is broken, if this low is broken, that's still bearish, right? If this high is broken, if this high is broken, that means that the market wants to go up, right? You see, so this is very important. You see this high, right? This high can be broken, right? This high can be broken, and the people will think that, oh, because this high has been broken, the market wants to go up, and then what's going to happen is that the market can still get to this level and then come down. Do you understand? So ultimately, what you're waiting for is that you want this high that created that low to actually be broken, then you have that indication that okay, the market is likely to reverse and go back up, right? But then anything in between this and that is bearish. Why is it bearish? Because lower lows are being formed. This was the last low that was formed, and that low was broken, forming a new lower low. And remember, anytime you're having lower lows and lower highs, that shows that the market is moving down. So anything in between this high and this low is bearish. It doesn't matter if it looks like it's going up. The main structure is telling us that this wants to go up, this wants to go down. Do you understand? That's what market structure is very important, because somebody's going to look at this and feel like, oh, the market wants to go up. But no, what is the structure saying? So market structure is very important. Like I said, if a high is formed, the low is formed. Trace where the high came from, trace where the low came from, and then if you're able to trace that, you mark those levels and you know that okay, that's my high, that's my low, and then anything in between them is what. Anything in between them is still going to remain either bullish or bearish until the swing highs and swing lows are broken to give you an indication of what needs to happen next. So yeah, market structure is something that everybody needs to understand, because once you understand it, then your daily biases will be more strong. You'll be able to know that okay, I know that this market is bearish right now, so it's likely that the market will sell. That's something that you're going to put down. So if you come to this, there are things that can actually help you, but I don't use them because I just feel sometimes it doesn't make no sense, right? So I mean it does, but I don't really pay attention to it. So if you look at let me close it. So if you look at this chart, remember you said it was bullish, right? But I said that based of the market structure we just did, this is bearish, right? We understand that we're in a bearish market. If you want to confirm that there are technicals here, yeah, if you go here on a daily, it tells you that it's neutral. But if you go, we're on the 4-hour time frame by 15 minutes time frame, right? All right, let's go to the 15 minutes time frame and see what it's saying. On a 15 minutes time frame, it tells you that is a strong sell. Well, that's the moving average is telling that it's a very strong sell. The summary tells you that the market is bearish, but the oscillators tells you it's neutral. What does that mean? It confirms what I'm trying to tell, that this market is, in as much as all these things is happening, this market is not bullish. It's very, very much bearish. But then it looks like it's bullish, right? But the market structure is actually telling you that this is bearish. So you have to understand the market structure so that you don't make a bearish structure, a bullish structure, and they feel like, oh, because it's bullish, I'm looking for buys. Meanwhile, this low has been broken, right? And has given you a new low and then you know where the high that low came from this high. So anything in between them is still bearish, because one of the highs or lows would have to be broken, especially this high would have to be broken to indicate that the market is bullish. Do you understand? So it's very, very important. You have to understand market structure. It's very easy. If you could, sometimes if you get into the market and it's like this and you get confused, get your path tool and draw them out like we did, right? Draw them out and then you pick it out, and then obviously you get your path to your trend line to mark the levels, the highs and lows, and then you begin to break them down just like we did. Obviously, because if you're new at trading, then yeah, you're gonna have to do that. But once you get used to it, you don't have to do all of that. You'll be able to look at it and know, okay, for example, if I come into this market right now, I will. What am I going to do? I'm looking for my highs and my lows. That's something that we're going to talk about in the next video, and then I'll be able to explain to you guys on maybe Tuesday. I'll be able to show you how I mark up the markets, right? So when I come into the market, for example, if I come here and I'll know that this is a low, right? I just mark this one up. Let's change this color actually. Yeah, I mark this one up. That's a low. This will be a low as well, but this low is higher than this low, right? So that's an indication of a higher low, a lower high, right? Because this low is low, but it's higher than this low, so that's a lower high, right? Okay, and then what happens is that I'm going to mark up my highs, right? So that's my high as well, because this low came from this high, right? Usually I use the body just for for it to make sense for me. It doesn't mean anything. Somebody can use the wicks or whatever, but I like to use the body, right? So I'm looking for one of these things to be broken. If this high is broken, then I look for broken, and then what? Buying to that point. Do you understand? If it doesn't break that high, and then it comes and then it breaks this low, comes to that level, and it will begin to sell to this level. So this is what I'm looking for on this particular your GBP. On Monday, I'm looking for either this high to be broken or this low to be broken. I'm just using the 15 minutes time frame for this one. So I don't take my analysis from 15 minutes time frame. I do it on the 4 hour and the 1 hour. That's why I do my markups. But just for this example, I'm just using this. This is something that you'll be looking at. Do you understand, when the market opens? But market structure is so important. Market structure is so important. Remember, if you're new and you come into the market and all these candles are confusing, get your path to and then draw them out. And then once you draw them out, you pull it out. Because if I go back and I put this thing here, it's the same thing, right? It's the same thing. There's no difference. It's the same thing. But if I'm getting confused, what I'm gonna do is I'm gonna draw it out. I'm gonna pull it out, and I begin to draw my line so that I know that, okay, this market is actually not bullish, it's bearish. So I know that it's likely that we're going to sell. Then you begin to look for opportunities in there. Do you understand? So yeah, that's what market structure is all about. Obviously, I'm gonna upload a video for this particular one. You guys should watch as many times as possible. Let me stop the recording now, and then we can have a conversation. And if you have any other questions, yeah. So this will be the end for this market structure 2. The next video that we're going to do will be marking up the charts. I'll show you how I mark up the charts to find opportunities. Yeah. So yeah.